Uh, yes, Urmila.
Hello friends, welcome to our channel Team Casa. Once again, we are here with another episode of our learning series. Today we have our guest speaker, CA Kirti Chabbra. Welcome, ma'am. And today our topic of the webinar is concept of inverted duty structure in view of Gujarat High Court. And we are also going to discuss new intricacies in liquidated damages and practical issues in e-invoicing. And also we are going to cover various interesting judgments also. Let me introduce our viewers with our speaker. She is an principal associate at Lakshmi Kumaran and Sridharan Attorneys and is dedicatedly involved in the indirect taxation advisory. And she has experience of 4 years of post qualification. She is LLB and chartered accountant as well, and she has experience in aviation industries, logistic industries, and real estate industries, hospitality industries, and other industries as well. And she will be sharing her views and experience on the mentioned topic. If you have any queries related to this topic, you can mention in the comment section or live chat, and we will definitely discuss in between the section or at the end. Now I hand over CA Sumiji to to say a few words in welcome to all the viewers and our guest faculty.
Thank you, Urmila. Once again, welcome to our speaker, Kriti Chabbra ji. Welcome to you in this YouTube channel, Team Casa. And the first time she is here. So once again, warm welcome and all viewers who have joined right now and who are going to join. As Urmila said, today's topic is important on the decoding latest judicial pronouncement and recent development under GST. So various particular topics will be discussed under this session. And कोई query है आपकी तो we can take up in the between or in the last. And once again, eminent speaker C. Kriti Chhabra ji, welcome to you on this YouTube channel. And now I request to take up the formal technical session. Over to you, Kriti.
Thank you, Sumitji, and thank you, Urmila, for such a generous introduction. Thank you so much, and thanks all for joining us. So yes, our today's session, just to confirm, is my slide visible to you?
Yes. Yeah.
Okay. So again, as Urmila mentioned, our scope of discussion for today will be first, I'll discuss some latest judgments under GST. So first will be inverted duty structure in the light of this recent Gujarat High Court. So I'll take a bit more time while discussing this judgment because I feel that this has most interesting, reasoning and ratio as compared to other judgments. So I'll give a comparatively more time to this judgment. Then we'll discuss the judgment of Chennai CSTAT in the case of for the case of this liquidated damages. Then I'll discuss again Gujarat High Court judgment for intermediary services. After that, I'll discuss certain recent developments. First and foremost, this very recent development for interest under Section 50 of the Central Goods and Services Tax Act. After that, the hottest topic of these days, e-invoicing. And after that, I'll also discuss certain other updates, and then we can have question and answer session. You can also, as Urmila mentioned, post your questions on the chat box so we can take up at the end. So let us start with our session with this. So first, as I said, the first pronouncement is VKC Footsteps India Private Limited versus Union of India by Gujarat High Court for refund under inverted duty structure. So before jumping onto this judgment, I would like to first discuss about the concept of inverted duty structure so that everyone be on the same page. So if we see what exactly is an inverted duty structure is. So this concept has been defined under GST as meaning where the rate of tax on inputs being higher than the rate of tax on output supplies, other than nil rated or fully exempt supplies. So for instance, you are engaged in manufacturing a motor vehicle and that is taxable at the rate of 28%. And you are procuring certain steel which is taxable at the rate of 18%. So just to clear this transaction would not amount to inverted duty structure because the rate on inputs is not higher than your rate on output supply. However, on the contrary, if you see the other illustration, wherein you are engaged in manufacturing a tractor, which is taxable at the rate of 12%, and you are procuring steel, which is taxable at the rate of 18%, then this will amount to inverted duty structure for the reason your inputs, rate of tax on inputs is higher than rate of tax on your output supply. So again, as I mentioned, in case your output tractor is exempt, then you are not eligible for this benefit of inverted duty structure. So nil or exempt supplies have not been covered under this concept. Again, I would also like to clear here that inverted duty structure has nothing to do with the amount. This has to do with the rate of tax. So this comparison has to be drawn between the rate of tax. So this is the like basic concept of inverted duty structure. So now here the question arises, what are the benefits that are there under GST law in respect of this inverted duty structure? So there is section 54, which talks about refund of tax and certain other amount from the government. So there is the section 54.3, which provides refund of unutilized ITC. So it says a registered person may claim refund of any unutilized ITC at the end of any taxable tax period, provided that no refund of unutilized ITC shall be allowed in case other than first, zero rated supplies made without payment of tax, and second, which is important for us, where the credit has accumulated on account of rate of tax on inputs being higher than the rate of tax on output supplies. So if we actually analyze this provision, so we can see there is a main enabling provision which says a registered person can claim refund of any unutilized ITC at the end of tax period. Then this proviso which curtails this benefit to only those situations where the credit has accumulated on account of rate of tax on inputs being higher than the rate of tax on output supplies. So if you actually say this, so this proviso basically determines the eligibility criteria, that once your rate of tax on inputs is higher than your rate of tax on output and you have certain accumulated ITC, then you can claim credit of any unutilized ITC, be that ITC related to input service or input goods. So there is no distinction in the enabling provision of this section. However, there is distinction only with respect to the proviso given there. So this is the one thing which should be keep in mind. So I'll go now. There is this rule 89.5, which basically clears out or speaks about the formula of calculation of this inverted duty structure. So here the question arises that how to compute the amount for which you can go to department and claim refund. So if you see, there is this refund amount formula given under rule 89.5, which says that refund amount shall be equal to turnover of inverted rated supply of goods and services divided by adjusted total turnover into net ITC minus tax payable on such inverted rated supply of goods and services. So if we actually analyze this formula, there are three terms used in this formula. One, turnover of inverted rated supply of goods and services. So this turnover talks about both goods as well as services. Second, here adjusted total turnover, though it is not mentioned here, but to be just to clarify, this also includes everything, be it a total turnover related to goods or services. And basically this includes as well as inverted rated supply of goods or services, as well as the other supply of goods or services which are being made by the supplier to the other recipients. So this is one thing. Then comes the net ITC. Now what is this net ITC? If we actually see net ITC, there is where the problem arises. So net ITC has been defined under the explanation to rule 89.5 as meaning input tax credit availed on inputs during the relevant period other than the input tax credit availed related to some credit. So if you see, net ITC only curtails the benefit to inputs. It does not cover in its ambit input services. However, this was amended through an amendment notification that was dated 18 April 2018. Before that notification, net ITC used to cover inputs as well as input services. However, with effect from 18/4/2018, this input services was deleted from this enabling provision, from this rule, or from this definition of net ITC. And with effect from this, through this notification dated 13th June 2018, this amendment was made retrospective. So basically, government made it clear that any person could not claim benefit of refund in case of ITC pertaining to input services since 1st July 2017. So this is where the whole problem arose, that if you actually see section, so section does not curtail the benefit only to inputs. Rather, it talks about any unutilized ITC, but rule in like furtherance to this, rule curtails the benefit only to inputs, and it disallows the benefit of refund of input services. So why this amendment was brought in? That's a major question. That is because of the GST authority's view. So basically, GST authorities also issued this circular in December 2018, wherein they cleared that since if you see section 54.3, that talks about any unutilized ITC, but there is a proviso which talks about rate of tax on inputs being higher than rate of tax on outward supplies. So they say that since the intention of law is never to allow you refund related to input services or capital goods, therefore this amendment through notification was made into effect, so that the intention of law as well as the rules both are kept at par. This was the view of CBIC, through which was clarified through circular. Thereafter, there was this AAR of the TPL also, wherein also the Maharashtra Advanced Ruling Authority also gave similar view, that a person is not eligible to claim the refund in case of ITC pertaining to input services under this inverted duty rate structure. So now with this whole anomaly, this person, VKC Footstep India Private Limited, so this filed this writ petition to Gujarat High Court, wherein this person was engaged in manufacturing certain shoes which were taxable at the rate of 5%. So while supplying these goods, he was procuring certain job work activities or certain input services or certain other inputs which were leviable to 12% or 18% rate. So therefore, he wanted to claim the benefit of inputs as well as input services, which is accumulated at his end because of this inverted duty structure, because his output supply is taxable at the rate of 5%, but his inputs and input services were taxable at the rate of 12% or 18%. So, so what were the contentions of the petitioner while they filed this writ petition to Gujarat High Court? So before going to that, I should just clarify here that this was not the only petitioner in the writ petition. There were series of petitioners who filed a writ petition to High Court on the similar matter. So this was only for the purpose of convenience. This name of VKC Footstep was taken into consideration. Otherwise, the facts were similar for all the petitions, and all the petitions were taken up simultaneously and addressed simultaneously by Gujarat High Court. So here the question arises, what were the question exactly and what were the contentions of the petitioner? So the only question before the Gujarat High Court was whether the amended Rule 89.5, which basically restricts the benefit of refund only to the extent of inputs, is ultra vires Section 54.3, in as much as Section 54.3 provides for refund of any unutilized ITC accumulated on account of inverted duty structure, thereby covering credit of both inputs and input services. So this was the basic question before High Court, to which petitioner's contention was, since if we see the basic feature of GST since beginning was the uninterrupted and seamless chain of ITC. The basic intention was to eradicate the earlier problem which was there under multiple taxation regime, that was seamless chain of credit. So that was the first and foremost intention behind bringing this GST. And now this problem, now this curtailment of refund to inputs only is creating this problem, which does not seem to be the intention of law. Again, when they referred to first discussion paper on GST, which was published in 2009, therein also the authorities actually recognized that earlier under the pre-GST regime, there used to be this issue of accumulated ITC. So they specifically wanted to remove that problem under the GST regime. So they highlighted that wherever the tax on inputs, so there they use the word tax on input tax. So basically, amount of input tax is higher than the amount of output tax, then you should be eligible for this inverted duty structure. However, it seems that the only problem that under GST regime, while you are actually writing this law, instead of amount of input tax, you have mentioned tax on inputs. So this seemed to be a mistake there. So that's what the contention of the petitioner was. Another thing is 89.5, if we see, is discriminatory in nature. Why? Because if you see 89.4, which gives similar benefit to zero rated suppliers or supplies made to suppliers, therein you can claim the benefit of refund for inputs as well as input services. So this was again the contention of petitioner. So these are creating discrimination without any intelligible differentia under Article 14. So therefore, this is violative of Article 14. Again, that they made similar points. So if we see section 54.3, so that talks about the any unutilized IDC, and then the rule cannot curtail the benefit. Rule cannot override this section. Another thing, if we see ITC has been defined as both inputs as well as input services. And obviously the rule should also, so basically they also made this point that only rationale behind referring to rule would be that a person who has both types of levies, like he is engaged in making certain supplies on which reduced rate of tax is applicable, as well as he is engaged in making some supply at which 18% or normal tax is applicable. So this rule should be referred so as to curtail the benefit only to the extent the ITC of inputs and input services pertain to inverted duty rate structure output supplies. So this rule should be referred in those cases. However, when a person is only engaged in making a supplies which is inverted, which falls under inverted duty rate structure, then you should never refer to this rule at all. So these were the contentions of the petitioner. So what were the observations of High Court? So High Court basically relied upon three concepts. First, they observed that the first discussion paper on GST, which was published in 2009, actually talks about input tax at higher rate than output tax. It doesn't talk about tax on inputs being higher than tax on output. They also saw that section 54.3 talks about any unutilized ITC that does not curtail the benefits to only inputs or only input services. It is only the proviso which is there, which says the tax on inputs being higher than tax on output tax. Further, they observed that tax on inputs being higher than outward supply. So outward supply again covers goods as well as services. So they say that this does not seem to be intention of the law. Why? Because of these provisions, this does not seem to be the intention of law to curtail this benefit only to inputs. And thus they said that explanation A to Rule 89.5, which denies the refund of unutilized ITC paid on input services as part of input tax credit accumulated on account of inverted duty structure, is ultra virus, the provisions of section 54.3 of the CGST Act. And therefore they asked the GST authorities or respondent or department to make the refund of input services also to the petitioner. Now, I would like to make certain observations here. Definitely, this is a welcome judgment. This is a very favorable judgment for the assessees who are being faced such harassment at the end of department that they were denying the refund of input services. However, section does not talk about it. So definitely, this is a welcome judgment. But there is a problem. Court did not discuss about the reason of proviso being here. So since we cannot deny the fact, there is a proviso which talks about tax on inputs being higher than tax on outward supplies. So court did not give any meaning to this proviso, like as to how to read this proviso. Court should have mentioned that either this tax on input should be read as input tax only, which includes inputs as well as input services, or it should have been said that this basically proviso determines the eligibility criteria of a person. So once a person falls under this eligibility criteria, then he is eligible to avail refund of any unutilized ITC which is accumulated in his hands. So, but court remained silent on this aspect, and the reasoning was not sound in respect of this. So, therefore, I feel there is a chances of litigation at higher level because of the reasoning given there. So, therefore, in light of this judgment, there comes three main issues, which we should ponder upon. First, whether the benefit of inverted duty structure can be claimed when tax on input service is greater than the tax on outward supplies. So again, the question I mentioned, that since court remains silent on this aspect, what is the meaning of this proviso? So a question may arise that a person who is engaged in making an outward supply, let us say of the shoes, which is taxable at the rate of 5%, but he is availing certain inputs, which is taxable at the rate of 5%, but he is also availing certain input service, which is taxable at the rate of 18%. Since उसके पास ऐसा कोई भी credit नहीं है, input नहीं है, which is more than the tax on output, but there is this input service, which is exceeding the rate of tax on outward supply. Whether he is eligible to take this benefit of inverted duty rate structure, this is a question. In my view, this cannot be a case because this proviso, if we read, this contains the eligibility criteria. Unless and until the wording of the proviso is changed into the input tax or amount of input tax, till then we cannot say that in case your input service is higher than your outward supply, you can take the benefit of inverted duty rate structure. In my view, we cannot say this. Second issue arises. What is the now view of refund of past period? So there can be 2-3 types of cases in case of refund. Like sometimes some persons have already gone for refund application file, but rejected and no further action taken by them. So this is the settled principle. In this respect, in my view, this is a settled principle of law that in case you have like fought your battle and you have left it, basically you have went for the application, a negative order came, then you did not file any appeal against that order, and the time limit exceeded. Then you do not have any recourse. Then you cannot just take the benefit of another person's case for your case. So this is a negative point for those persons who did not take any action at that time when department rejected their claim. However, if you have never gone for your input service refund so far, then you can go for the same basis this VKC Footsteps Gujarat High Court judgment, subject to the condition of 2 years time limit, which is there under Rule Section 54. Third question. Since if we see the interpretation of court or reasoning of the court, they have gone into fact because the word any has been mentioned under Section 54(3). They have mainly emphasized on that term any. So can we say that going by that reasoning, the person can claim the benefit of capital goods as well? Since going by that reasoning or ratio can equally apply in case of capital goods, because that does not curtail the benefit to input tax or any inputs or input services. That talks about any unutilized ITC. So that covers the capital goods credit also. However, if we see the judgment part of the decision part of the judgment, that clearly says that respondent or the petitioner is eligible to claim refund of inputs and input services. So basis that judgment, we definitely cannot take the benefit for capital goods. But in my view, we can go for another application for seeking refund of capital goods. In such cases, basis the same reasoning which is given under the VKC Footstep by Gujarat High Court. So these are the three issues I thought which are very relevant and I wanted to discuss here. Now let us come to our another issue. So next pronouncement, if I see, is related to foreclosure charges leviable to service tax. This is a case of Commissioner of Service Tax Chennai versus Repco Home Finance Limited. So this is a Chennai CSTAT larger bench judgment. I picked this judgment because this is very important in respect of the disputes going on in these days for liquidated damages. Therefore, I specifically picked this judgment. So let us see what was the problem in this judgment and what was the question before the court to analyze. So if we see the facts here, so Repco Home Finance Limited, which was a banking and financial company, had provided certain lending services to its borrowers. The said services are for an agreed period at an agreed rate of interest, subject to certain terms and conditions which were contained in the agreement itself. So, in certain instances where borrowers decide to close the loan before the stipulated period, then they could come to bank and ask for or ask for pre termination of this loan agreement, and then they had to pay certain foreclosure charges to bank as a penalty or as a consideration, whatever you say. So this is, if we actually understand the facts, this is a very common scenario wherein we see, like usually the banks, wherever you enter into a loan agreement with the bank, they provide you a certain rate of interest for a fixed period of time. Let us say I have taken a home loan from some bank at the rate of 6%, 12% for 6 years. Now, let us say I, at the end of 4 years, go to the bank that I want to discontinue with this loan and please close my loan and I am ready to make you the entire payment at the end of 4 years itself. Now, bank usually charges a prepayment penalty or foreclosure charges, which has a separate mechanism for its computation. Like if you see you have your 2 years left with you, then bank would compute, okay, you pay me 6% of the total amount due, and you can close your loan. So this amount, which is paid by this borrower to loan, this was the question whether this amount, which is basically termed as foreclosure charges or prepayment penalty charges, whether this is a consideration towards banking and financial services in the hands of bank and hence leviable to service tax. So this question pertained to 2000 pre negative list regime. So when there was this positive list regime, so before, as we all know that before 1st July 2012, there used to be positive list regime under service tax. So only those activities which could fall under one of the entries which are there under the service tax regime, only those activities were taxable, and the activities which could not fall under any of the entries were not taxable under service tax regime. So therefore, the question before the court was whether these foreclosure charges on termination of the loan prior to agreed period can be subjected to service tax under banking and other financial services. To this, the revenue's contention was that these charges are in relation to lending activity, which is a part of banking and financial service. So this lending activity was made part of banking and financial services in 2004 only. So therefore, they were saying that these foreclosure charges are related to this lending activity, which forms part of banking and financial services. Therefore, service tax should be leviable on such charges. And also, they said these charges do not have the character of interest income, because which is basically exempt under service tax, and hence cannot be termed as penal interest, since penal interest is chargeable only in case of default in making the regular payment and not for making payment before the stipulated period. So here as we see, revenue had this contention that these are not in the nature of interest charges. Also, they were under the impression that banks are getting prepayment, so they are being benefited. Therefore, they are getting extra consideration, which is not in the nature of penal charges because there is no default as such. Therefore, this is a consideration towards this service. However, Repco's, if we see applicant petitioner's contention was that these foreclosure charges are not towards any consideration for a service. So this was one of the main contention of the applicant. However, there are other contentions also. So this was the entire scenario. Now this CSTAT made certain observations, which are actually very interesting and very relevant to note. Like first observation the CSTAT made was this service to levy a service taxable under service tax regime. There should be at least two components. One, there should be an activity, and second, there should be a consideration. So they discussed the term consideration in length and in detail. So very nicely articulated judgment, wherein the consideration they discussed, since the consideration is defined in an inclusive manner under service tax regime. So this should be understood in its natural meaning and thus must flow from the service recipient to the service provider at the desire of the promisor. So they said since the bank, being promisor, does not desire such payment. So they observed this and made this specific observation that bank here is not getting any benefit from the prepayment of a loan amount. These are at not the benefit, not for the benefit of bank, rather they are being hit by this activity of the recipient or of the borrower. That's why they are penalizing the other party. So basically, if we see, this is not in the nature of consideration because this is not being flown and not being asked specifically by the bank. This is being flown by the recipient as a part of unilateral act of him for discontinue with this loan. They also observed there is a difference between condition of contract versus consideration of contract. So they say every condition cannot be a consideration of contract. So this is a part of condition on a contract that you cannot discontinue with this loan before that period, and therefore this cannot be said to be consideration because this is merely a condition of contract. So for that purpose, CSTAT also relied upon Bhayana Builders and intercontinental landmark judgments. Next thing, bank observed that these foreclosure charges compensate the bank for the loss in interest income and for breaching the promise to service the loan for the agreed period of time. So this is what the main observation of the CSTAT was, that these foreclosure charges are in the nature of compensation. These are basically liquidated damages as per the Contract Act to make good the loss occurred to the bank. Since bank, when given you a loan, had initially expected this much amount of interest for the entire period of time, and he may have incurred certain expenses to incur such to earn such income also. However, now when you are discontinuing with that interest income, then the expectation or opportunity loss has caused at the end of the bank. So for that to basically correct that loss incurred by the bank, this compensation is being paid to the bank. Therefore, these are nothing but damages in nature, liquidated damages in nature. Also, the court also observed, like one, this is not consideration. Another, there is no activity. So they said foreclosure is antithesis to lending. This is not in relation to lending. Further, the foreclosure charges are not alternative mode of performance. So this is the one of the again most important observation of the court, that wherein they discussed when there is a repudiation of contract or when there is a cancellation of contract, you cannot say there is an alternative mode of performance. You cannot say that if you will avail these services from me, then I am making you these services, and if you discontinue the services of mine, then also I am providing some services to you. So they very nicely understood the concept of alternative mode of performance in case of cancellation of contract. And also the court also made another observation, that it is not necessary that the entire contract should come to an end to make a consideration as liquidated damages. So this consideration, this observation, if we see, it was not the ratio of the judgment, because this question was not revolving around this particular question as to whether when a contract is partly cancelled or like is not completely cancelled, then also can we say it is the compensation is in the nature of liquidated damages. However, court made this observation also. So we can definitely use this observation as a obiter dicta for other cases wherein we are facing with the similar issue. So these were the very important judgments of the High Court, and hence basis this, the court said that the foreclosure charges are not leviable to service tax under banking and financial services. So this is again a very relevant judgment. Now here arises certain questions which we should ponder upon or which we should consider for sure. First question, applicability of this judgment for negative list regime and GST regime. Why this question is coming? Because as we know, as I mentioned, before 1st July 2012, there used to be positive list regime. So certain services were mentioned. In case some activity falls under that services, then only that can be made taxable. So clearly they said this foreclosure charges cannot be said to be services in relation to banking and financial services. Now the question arises that with effect from 1st July 2012, negative list came into picture, wherein where every activity was made taxable, and in addition to that, they also come up with a deemed services entry, wherein there was this entry number E, which talks about agreeing to the obligation to tolerate an act as a deemed service. Similarly, similar regime or similar mechanism has been carried forward under the GST regime, wherein supply has been defined in a very extensive manner. And Schedule 2 further talks about certain entries which should be deemed to be either supply of goods or either supply of services, which covers agreeing to the obligation to tolerate an act. Also, we have certain negative judgments, not judgments, but AR in our hand, like North American Coal Corporation or Goa Industrial Development Corporation or Maharashtra State Corporation for that matter, which clearly categorically talks about liquidated damages in case of repudiation of contract. And they say that liquidated damages are taxable under this particular head, that is, agreeing to the obligation to tolerate an act. So there the question arises whether this judgment has any impact under the revised scheme of this negative list regime and GST regime, wherein this specific entry is there. In my view, this judgment can squarely be applicable even under the GST regime and negative list regime for the specific reason that court, while discussing the ambit of banking and financial services, also discussed the concept of consideration through its natural meaning. Since the concept of consideration has not been changed at large under the negative list regime or under the GST regime vis-a-vis the pre-GST positive list regime, therefore this ratio can squarely be applied even under the current cases also, wherein these type of issue arises. So since they have very nicely articulated the meaning of consideration, so therefore we can definitely apply the similar ratio even in current cases. Another issue which may arise is applicability of judgments for cases where the contracts are not terminated completely. Therein also, as I mentioned, though the ratio is not squarely applicable, but somehow it has a persuasive value for this cases also. And also the court has made this obiter dicta, wherein they have said that even for to qualify a liquidated damages, there is no requirement to cancel a contract completely. So that ratio definitely can be applied in those cases also. So this was the CSTAT Chennai judgment. Next, I would like to talk about another very important judgment on the aspect of intermediary services. This is in the matter of Material Recycling Association of India versus Union of India. So if we see, in this case, this Material Recycling Association of India was a basically broker. So what he was doing is he was facilitating the supply of goods, some spare parts or equipment, between an exporter which is located outside India vis-a-vis the importer which is located within India, or a purchaser which is located outside India. So he was basically facilitating two type of transaction. One, a sale transaction between an exporter located outside India and the importer located outside India, and the second transaction between the exporter located outside India and the importer located outside India only. So he was engaged in such type of activity. So therein he was earning some commission from the exporter or seller located outside India. So his basic contention was, if we see his basic contention was that since he is not engaged in any specific activity, so basically under the GST regime, his activities falls under the ambit of intermediary services, as per which the government has made the taxability through section 13(3) B of IGST Act, which says that intermediary services, the place of supply of such services shall be place of location of the supplier. Therefore, such services can never qualify to be export of services. So this was the basic objection or question of the petitioner before the High Court, wherein it raised a question that this section 13(8)B of the IGST Act, which talks about intermediary services, is ultra-virus and unconstitutional. So what were the contentions against this by the petitioner? So contentions were that the parliament is authorized to formulate the principles for determining when a supply is deemed to have been undertaken outside of the territory of the state, or when it has been undertaken in the course of import or export of such goods or services. And parliament has not been empowered through Article 286 to determine the place of supply, to create this deeming fiction of place of supply. His another argument was that these transactions of petitioners are in the course of export. So basically, he is supplying these services to the persons who are located outside India, and he was getting amount in foreign currency. So therefore, these are in the nature of in the course of export of services only. Also, there is no distinction between these services and the advisory services or consultancy services or any other service for that matter. So therefore, there should not be any discrimination or differential treatment between such services wherein general rule of place of supply applies and the recipient of service becomes the place of supply. However, in case of intermediary, you are deeming it that the location of supplier is a place of supply. So he said you are unnecessarily creating this discrimination between the two entries when there is no actually change in services. Therefore, this is violative of Article 14. Another argument he also made that even the concept of intermediary is not very clear. What do you mean by like on its own account? How can someone provide trading services on its own account? Then he will become the trader himself. So what is the scope of intermediary? That is also not clear. And the last argument he made that these kind of services or taxation practice would create double taxation in the hands of recipient. Why? Because India is also levying tax on such an activity, and probably the recipient who is located outside India may have to pay tax under RCM on such activities. Therefore, this is nothing but double taxation, which is against the Constitution of India. So these were the primary arguments made by the petitioner. So herein, if we see the observations of High Court, High Court negated the argument of petitioner, stating that this Parliament power to say that 13(8)(b) of the IGST Act is basically validly formed by the Parliament under the 246A, to which basically gives the power to make the provisions relating to interstate supply of goods or services. Therefore, they said they had this power to make this provision to determine as to when a supply can be said to be interstate supply of goods or services. Therefore, these place of supply are not unconstitutional as such. They also said that the basic intention behind Section 13(8)(b) was to levy CGST and SGST and keep such intermediary services outside the ambit of IGST. So this is one of the most important observation of High Court, wherein they have said that intermediary services, while providing these services to companies located outside India, are basically intra-state supplies. So recently, this is why this is important, because recently some of the AARs were raising this question that Section 8(2) of IGST Act talks about intrastate supplies, which starts with the phrase subject to Section 12. Therefore, they had this contention or view that Section 13 can entries falling under Section 13 can never qualify to be an intrastate supply. Therefore, the intermediary services would qualify to be interstate supply when provided to a person located outside India. However, this judgment clears out that doubts and says that the intention behind 13(8)(b) is to levy CGST and SGST and to make that entry intrastate supply. So this is important judgment. Also, court negated the argument this would create double taxation by stating that the recipient is not required to pay tax under RCM in such cases. So basis that, the High Court held that Section 13(8)(b) is basically not ultra virus or unconstitutional in any manner. So this is the judgment seems fine to me. However, I have one or two observations only to make, that the court did not discuss about why a recipient which is located outside India cannot qualify to be a double taxation in its hand. Court did not give any strong reasoning or any factual reasoning for that purpose. So there I seems to be a bit lack while discussing the judgment. So this was the observation on this judgment. With this, I conclude my judicial pronouncement discussion part. Let us now move ahead to certain developments, recent developments. So one of the most important recent development in these days is levy of interest under Section 50 of CGST Act. So this amendment has been brought in just day before yesterday. So what exactly this amendment is? So this Section 50 of CGST Act lays down the provision relating to interest on delayed payment of tax. So this subsection 1 of this section provides that every person who is liable to pay tax but fails to pay the tax on any part within the period prescribed shall, for the period for which the tax on any part has been delayed, pay the interest at such rate as been notified. So this is the enabling provision of section 50, which says in case you have delayed paid your tax, in such a case you are required to pay interest. However, from with effect from 1st September 2020, there's going to be this proviso inserted in this section, which says that provided that the interest on tax payable in respect of supplies made during a tax period and declared in the return for the said tax period furnished after the due date shall be levied on that portion of that tax that is paid by debiting the electronic cash ledger. So in nutshell, this proviso says that you are not required to pay interest on your gross liability. You are just required to pay interest on your net cash liability in case you are paying some tax through filing GSTR 3B and that has been delayed. So for that particular purpose, they have said you are not required to pay interest on the entire gross liability. You can only pay interest on your net liability, that is net cash liability, that is the total liability, let us say 100, minus the liability which was paid through your credit, let us say 60, then you are liable to pay interest only on 40 rupees for the delayed, for the shortfall time. So this is the new proviso which has been inserted. So this is one of the long awaited proviso or benefit which was yet to be notified by the government and has recently been notified on 25th August, which has been made effective with effect from this 1st September 2020 through this notification 63 by 2020. Now let us see what is the problem behind this proviso. So as I mentioned, this is a long awaited proviso. So what is the journey so far of this proviso? So if we say in the 31st council meeting held in on 20th December 2018, this amendment was proposed to be made by inserting this proviso. This was proposed by the GST Council in 2018 December. Thereafter, in 2019, through the Finance Act, through Section 100, this amendment was proposed, which was basically enacted with effect from 1st August 2019. However, this particular proviso was not yet notified, and it was mentioned the same will be notified at a later point of time. After that, Twitter handle account of CBIC, basically in 2020 February, so therein a proviso was inserted. So therein they mentioned in their Twitter account that this proviso will be inserted prospectively, not retrospectively. However, if we see the 31st council meeting had mentioned its intention to make this proviso retrospectively, that is to give the benefit to the assessees or taxpayers since beginning of GST regime. But Twitter account of CBIC made the otherwise observation. Next, in GST Council, and again in 39th Council meeting, that was in March 2020, the very next month, where after the CBIC Twitter account handle submission, the 39th Council GST meeting again clarified that this amendment will be made retrospectively, that is with effect from 1st July 2017. Meanwhile, we had certain High Court judgments in this respect on the very similar issue, wherein we have a contrary judgments. Like if we see Telangana High Court in the case of Mega Engineering and Infrastructure Limited, therein the court rejected the argument or the appeal of this petitioner on the ground that you cannot pay interest on net cash liability, rather you have to pay interest on gross tax liability. Why? Because they said, because of very basic nature of GSTR 3B, they said unless and until you file GSTR 3B under section 39, the ITC which is available with the government is basically in the cloud. That is not available with the department to set off. So that can only be set off once you file this GSTR 3B and this amount is being credited through your electronic credit ledger. So that was the observation of Telangana High Court, which rejected the appeal of the petitioner. However, then we had this favorable judgment of Madras High Court in the case of Reflex Industries, wherein they accepted this argument of petitioner by saying since tax interest is compensatory in nature, and you cannot say that something has been delayed paid when something is already with the government. So when this credit was already with the government, why the assessee should be liable to pay interest on that portion which is never been taken away by the government? Therefore, they said interest should be applicable on the net cash liability. Though this judgment of Madras High Court considered in its view that the proviso of Section 51 has been inserted, which was yet to be notified, but judgment ignored that part. But otherwise also, that judgment discussed that this proviso should be on is basically merely clarificatory in nature. Therefore, the benefit should be given retrospectively. So this basically this judgment said that this benefit can be given retrospectively. And after that, we had certain other judgments of Delhi High Court and Gujarat High Courts, which are for which like a stay on recovery of interest was imposed. However, no clear judgment was yet received. So this was the entire stage or journey so far of this particular proviso. Now, if we see the current position, so on 25th August 2020, amendment has been notified. However, this amendment has been notified prospectively. The notification, if we see, that does not talk about retrospective effect at all. However, the very next day, that is on 26th August, that is yesterday, CBIC issued this clarification through its handle. And again, the press release was also issued that interest on delayed payment of GST has been issued prospectively due to certain technical limitations, and they will ensure that no recovery shall be made for the past period. Though it is a kind of a security which has been given by the government, CBIC, and GST Council to the assessees, but there remains a question: what is the fate of these press releases? Because these press releases cannot be said to be binding, and since departments are already going after the assessees claiming interest on total cash or total liabilities of the client. So therefore, it is yet to be seen what is the fate of this press release, and we should definitely either seek some clarification from the government in this respect. So this is my view on this particular amendment. Now coming with the next issue, basically my development, that is in respect of e-invoicing. So that is one of the very talked about topic in these days, because as we all know, with effect from 1st October 2020, e-invoicing is going to be implemented by the government for specific class of notified persons. So what are those persons? What are the intricacies which are still to be resolved in this e-invoicing, and what are the main issues which have to be considered by the government before going live with the e-invoicing? I'll just discuss and highlight those very important points in this session. So if we talk about what exactly an e-invoicing, so there has been a general perception about e-invoicing that e-invoicing is nothing but generation of invoice on common portal, or the current ERP system or IT system of the customers or the taxpayers are going to be of no use. Further, this is going to increase complexities, and invoice generated manually are not an e-invoice. So these are the certain general perceptions of like taxpayer these days. However, I would like to clear here that these all are myths. This is nothing true about e-invoicing. So here comes the question: what is an e-invoicing? So e-invoicing has three constituents of it. First, you have to generate your e-invoice, or basically your regular invoice, with certain prescribed particulars which have been prescribed by the government through recent e-invoicing schema. So the current invoice of yours should have the mandatory fields which has been introduced by the government in your current invoice system. Second, that system should be capable enough to convert that file into a JSON format. Third, you have to report these data of your invoice to IRP portal of the government, and then it will generate an IRN which should be affixed on the invoice. So this is the whole procedure. You have to only follow these three steps. So basically, you have to continue with your current practice of issuing the tax invoice through your current ERP system, but with certain new amendments or certain basically new additions which should be made in your ERP system. So what is basically objective behind introducing this e-invoicing concept? So if we see the objective, so we can see that the invoice generated on one system can be read by another person. This was the basic intention behind introducing this e-invoicing concept. Second, to pre-populate the return and e-way bill. So when this e-invoicing concept was introduced, government had in its mind the new return system will come into picture. However, now that idea has been dropped by the government, and therefore it is yet to be seen whether the old returns will have any changes, will be made any changes to make effective the proposal of this e-invoicing auto population between the return and the invoices. This is yet to be seen. Another was to reduce the reconciliation problem. And fourth, obviously, the main part is to reduce the taxation, tax evasion or efficiency, and to increase the efficiency in tax administration at the end of the department. So these are the objective of e-invoicing. So now if we see what are those persons on which this e-invoicing mechanism is required to be followed mandatorily. So government has notified any class of registered person who has its turnover more than 500 crore in a financial year is required to issue e-invoice for the supplies made to registered person, and for the supplies made to unregistered person, this supplier is required to have a dynamic quick response code. So, what are the basic, if we see the basic feature of this entire e-invoicing scheme? So, as I mentioned, that you will go with the current mechanism only. You will continue with generating your invoice on your ERP portal. Thereafter, reporting of e-invoicing data in the JSON format will be made on the IRP portal. That IRP portal will give you an IRN, a QR code, and a digitally signed JSON format, which should be readable in your system. Thereafter, the IRP will update your return as well as in e-way bill portal, so that e-way bill can also be generated automatically, and the similar details are there in your return, so that at the end of the month you are not required to file your details again in the return. So this is the whole process of e-invoicing. Here comes a question: what is an IRN? So basically, IRN, which will be generated by the IRP portal, will be 16 four-digit string, which will be based on seller's GST, document type, document number, and financial year. So this can maximum contain 64 digits, and it cannot go beyond that. So, IRP portal will give you this IRN system, and you suppliers yourself cannot generate this IRN themselves. This will have to be mandatorily come through IRP portal only. Thereafter, at the time of uploading your details to IRP portal will also give you a QR code. So that is not a kind of an image. Rather, this will be a string which will contain the basic details which are mentioned here, like seller's GST and recipient's GST and invoice number, date of invoice value, etc. So certain important particulars will be carried through that string. So what is the benefit of that QR code? Is basically government wants to effectuate a system wherein the department can quickly run through the scheme of main details of the invoice. So this is basically the whole concept of IRN. That two numbers, that is IRN as well as the QR code, you have to mandatorily affix on your system, on your invoice to make it a valid invoice. So this is the concept of IRP. So this is basically a sample copy containing IRN and QR code. So this is the converted version of readable format of JSON format. So once IRP system will give you this JSON format, and if your system is capable enough to convert or read that JSON format, then that format will look like this, wherein you can, on the right hand side of the upper part, you can see there is a QR code. Then there is on the left hand side, there is an IRN number, acknowledgement date, and then certain other relevant details on the tabular form. So this is how it will look like, the JSON format once converted into readable format. Also, IRP portal has this utility wherein you can validate any JSON format so as to see whether the JSON format is basically registered on the IRP portal and whether this IRN number is authenticated or not. So that facility is also available on IRP. So if you see what is this digital QR code, so as I mentioned, for the B2C customers, a supplier whose taxable turnover, whose turnover exceeds 500 crore, is required to have this dynamic QR code on his invoice while raising to B2C customer. So this QR code has nothing to do with the IRP portal or registration on the IRP portal. This is a self-generated QR code which will be generated by the supplier himself through his own IT platform, and this has nothing to do with the IRP portal. So this is about the dynamic QR code. So now let us see the main issues and intricacies which are there in e-invoicing mechanism. So if you see the legal provision, that proviso to section 31 subsection 2 has been inserted a while back, which states that the government, on the recommendation of the council by notification, specify the categories of goods or services in respect of which a tax invoice shall be issued within such time and in such manner as may be prescribed. So this was what the proviso used to talk about. Thereafter, this Rule 42 was being amended, wherein Rule 48.4, 48.5, and 48.6 was inserted, which mentioned that for notified class of registered persons, invoice to be prepared by including particulars contained in Form GST INV1, RN to be obtained by uploading information on the portal in such manner and subject to such condition and restriction as may be specified. An invoice issued in any other manner is not treated as e-invoice. So if we see that section 31.2 as well as Rule 42 talks about invoices or tax invoices. So invoice has been defined under GST Act as only meaning tax invoices issued under section 31. So here comes the question, what is the entire applicability of this e-invoicing? For that purpose, if we actually, I'll just explain that point later on. But before that, if we see this notification number 13 by 2020, as amended recently by 61 by 2020, that talks about that the registered person whose aggregate turnover in a financial year exceeds 500 crore rupees shall prepare invoice and other prescribed documents in terms of Rule 48.4 in respect of supply of goods or services to a registered person. Further, there have been certain exclusions made by the notification, which are basically Rule 54.2, Rule 54.3, Rule 54.4, and Rule 54.4a, as well as SEZ unit. So if we see this notification talks about invoice and other prescribed documents. However, if we see the legal provision, that only used to talk about the invoice and the tax invoice. So basically the notification has gone beyond this rule and this section by including even other prescribed documents also under the ambit of this e-invoicing schema, and therefore which was otherwise not covered under the rule and section. So this is one of the anomaly which I want to highlight. So basis this, there comes a question that what are the documents which are being covered under e-invoicing schema? So these are the documents which are otherwise a taxable person is required to issue, like a debit note, a credit note, ISD invoice, bill of supply, delivery challan, receipt voucher, refund voucher, or self-invoice. So if we talk about debit note or credit note, though these are not tax invoices under section 31, which was otherwise prescribed under Rule 48.4. So these are not tax invoices. However, the entire scheme of e-invoice specifically requires that debit note and credit note should also be registered on the IRP portal, and IRN should be generated through for these invoices also when issued to a registered person. Therefore, for these for these two documents, a person is required to follow the e-invoicing provision, even if the same is not as per the rule and section given under the CGST Act. Next is ISD invoice. So I'll take up ISD invoice as well as self-invoice simultaneously. So ISD invoice, if you see, is not a document or a tax invoice issued under section 31. However, if we see, there is no clarity as on time as to whether this ISD invoice will also get covered under the e-invoicing schema or not. So we should wait for some more clarity on this respect. However, basis the rule and section, we can say that currently e-invoice should not be leviable on this ISD invoice because this is not a tax invoice as per section 31. But probably some more clarity can be expected from the government on this. Similarly, there is no clarification yet on section 30 on self-invoice raised under section 31, But one can take an argument that since these are not a tax invoice which are issued in respect of supplies to a registered person, therefore the same should not be reported under the IRP portal. However, as I said, some clarity can be expected. Now coming to bill of supply, clearly government is not intended to include this bill of supply under the ambit of e-invoicing schema. For delivery challan, receipt voucher and refund voucher also, there has been no indication that government wants to include these documents in its ambit. Also, these are not invoice or tax invoice as per the definition of section 31. Therefore, we can say that for these four documents, there is no requirement to register them on IRP portal. Now comes another question, that what are the suppliers who are required to follow this e-invoicing platform? So this question is being arised because there, if you see the notification that provides a person whose aggregate turnover in a financial year exceeds 500 crore. So aggregate turnover has been defined under CGST Act. So in the light of that, if we see aggregate value of all taxable supplies, excluding inward RCM supplies, exempt supplies, export of goods or services, and interstate supplies of persons having the same PAN to be computed on all India basis, but excludes the certain taxes of CGS of the GST. So here comes the question: what is the fate of interest income on advance on deposit? For example, a person, be it like say in the airline, airline is engaged in making, has given some deposit or advances to another company, and they are earning certain interest incomes on that. That interest income is otherwise exempt under GST. But when we see the scope of aggregate value of taxable supply, so that includes exempt supply. So whether that should be included in the ambit of aggregate value, in my view, yes, that should be included because there is no specific exemption for such exempt income. Next question can arise for deemed supplies to other registration. As we have seen that under the GST, separate registrations located in separate states have been considered to be distinct persons under GST. So therefore the question arises that when any supply without consideration made between these GSTNs are being taxable under GST, whether the same turnover should also be considered while calculating your aggregate turnover, which would otherwise get nil if you see the trial balance on a whole entity level wise. In my view, again, these have been deemed taxable supplies under GST, and there seems to be no exemption in respect of these supplies. Therefore, these should also get covered under the ambit of aggregate turnover. Next question, that the person who is only engaged in making supplies under RCM, for example, GDA, who have opted for 5% RCM route, or legal service providers like lawyers who are only engaged in making supplies on which recipient has to pay tax under RCM. In my view, again, if you see the aggregate value, that excludes inward supplies of RCM. That does not include outward supply of RCM. So even those persons are required to follow this e-invoicing scheme in case their turnover exceeds 500 crore, even if they are not required to pay any tax on their supplies themselves. Another point arises for income from sale of mutual fund or other securities. So these are the securities which have been excluded from the concept of goods as well as services. So therefore the question arises whether this will be included in aggregate value of all taxable supplies. So if we see the definition of supply, these securities can get covered under there. But if we see this definition of goods or services, these securities are not covered there. So in my view, a view can be taken that these securities, sale of securities, etc., should not form part of taxable supplies or exempt supplies. However, there can be a dispute in this matter because if we see section 17, so that specifically includes certain income in respect of such mutual fund, etc., for the purpose of exempt turnover. So a dispute can be taken, but in my view, we can take a view such turnover should not form part of aggregate turnover for the purpose of calculation of this e-invoicing mechanism. Next is turnover of B2B supplies or turnover of B2C supplies only. This is a very relevant question which is being asked by many persons to me, that since this e-invoicing scheme is going to be applicable on B2B invoices, so should I calculate only those B2B supplies while calculating my aggregate turnover, or should I consider my B2C supplies also? So again, in my view, one should see its eligibility criteria by including all its income, be it B2B or be it B2C. Once you fall under that eligibility criteria, you are required to follow this e-invoicing mechanism. Then you are required to issue e-invoice only in respect of supplies of B2B. But for the matter of eligibility criteria, you should include both for supplies in the ambit. So this is all about the disputes, some of the disputes for aggregate turnover, but however, there can be other questions also, which I may not have covered here. Next issue can be aggregate turnover of which financial year. So as I mentioned, the notification clearly talks about that a person whose aggregate turnover in a financial year exceeds 500 crore. But there is no discussion as to which financial year. So in my view, if we see the e-invoicing scheme also, therein also, it appears that the intention is to see aggregate turnover of the previous financial year. Since this is going to be implemented from 1st October, it nowhere seems that the intention is to cover only the period of April to September. Rather, it appears that the turnover should be taken for previous financial year. So this is what it appears from the clarity from the FAQs, etc. Now, there is also, as I mentioned, that there are certain exceptions which have been carved out from the ambit of e-invoice scheme. That is SEZ unit and certain persons which are mentioned under Rule 54, 2, 3, 4, and 4A. So, if here comes a very relevant question, a very important and the most disputed question these days. So, if we see notification number 13 by 2020, that says a certain note DAS has notified a class of registered persons whose aggregate turnover exceeds 500 crore other than those referred to in sub rule 2, 3, 4, and 4A of rule 54. So basically this notification talks about a class of notified registered person. So it appears from this introductory para of this notification that any person who is falling under these rules, if be it GTA, be it insurance company, banking company, or be it airlines, etc., they should qualify. They should are exempt from the ambit of this e-invoicing, and they are not required to follow this e-invoicing scheme at all because they are that notified class of registered person. But if we actually see Rule 54.3 for instance, there if we see there that talks about a document or a supply. Uh, for example, that talks about where the supplier of taxable service is goods transport agency supplying services in relation to transportation of goods by road in a goods carriage and issuing a document in lieu of he can issue a document in lieu of tax invoice which shall contain the following specific details. So if we see this 54.3 is qua the supplies of a taxable person. This is not applicable for all the activities made by a notified class of registered person. For example, this GTA, the Goods Transport Agency, is engaged in making uh, certain transportation of goods by road for which it issues consignment note, as well as it issues certain documents like for the purpose of deemed supplies to other GST, and that is support services or ancillary services to other companies or certain exempt supplies or like certain other supplies for that matter. So here comes a question whether he is exempt for all the supplies made by him for the purpose of e-invoicing, or this benefit can be claimed only to the extent he is issuing an invoice for which a consignment note has been issued. So this is a major question which is being arisen. Why? Because there is no consistency between notification wording of the notification number 13 by 2020, which talks about notified class of registered person, vis-a-vis rule 54.3, which talks about a supply only, vis-a-vis and the document. So therefore, this anomaly, which should be kept in mind and should definitely be like made a representation to the GST Council, seeking some clarification on this aspect, because similar question can arise on in respect of other supplies also. Like for that matter, we can see an airline which is engaged in making transportation of passenger services. They are also engaged in making other ancillary services or supplies to their passenger and marketing services to their other B2B customers. So whether they are exempt entirely from this e-invoicing scheme or only to the extent they are issuing tickets to the customers. So this is a major question which should be answered in my view. this since notification talks about notified class of registered person, so we can take a view and we can take benefit of this language, and we can say any person who is falling under the GTA category is exempt from following e-invoicing schema for all the supplies made by it. So this is like my view, but again, this has yet to be tested before the appropriate authorities. Now there is only also one another most important anomaly which is there under e-invoicing scheme. That is under Rule 46 with the Rule 48.4. So if we see Rule 46 talks about certain particulars which should be there in a tax invoice. And Rule 48.4 talks about manner of issuing invoice. So basically, their Rule 46 was already into picture since the beginning of GST regime, which contains certain particulars which should be there in a tax invoice. So there are certain particulars which are mentioned there. Now, for the purpose of this e-invoicing, Rule 48.4 has been inserted, which says that invoice shall be prepared by notified class of person by including such particulars as mentioned in Form GST INV 01. So if we see now under this e-invoicing scheme, Rule 86 is already in place because government has not abolished or made any relief to the persons from Rule 46, as well as Rule 48.4 also prescribes certain particulars. So both these rules are talking about the same applicability, that is both are defining certain particulars of invoices. So therefore this question arises, which rule should be followed by an eligible registered person for the purpose of e-invoicing? So in my view, again, in this respect, since there is either we should seek some clarity from in this respect from the government that which rule should be followed, or we can just read both the rules harmoniously to until we get some more clarity in this respect. Until that time, whatever is mentioned as mandatory items or particulars under Rule 46, as well as the mandatory items of Rule 48.4, which is mentioned under e-invoicing schema, should both be corroborated in your invoice for the time being, and like both the particulars should be mentioned there. So like the relevant questions in this respect are, as I mentioned, there are certain particulars in Rule 46, like reverse charge mechanism, yes or no. That is mandatory under Rule 46, but optional under Rule 48.4. In my view, that should be there in your invoice till the time you get any clarity from the government in this respect. Similarly, another question arises for signature, digital signature or manual signature. So if we see Rule 46 specifically this says that there should be a signature on the invoice. However, the new e-invoicing schema and the whole e-invoicing scheme, etc., and the FAQs, that says you need not to require have any digital signature mandatorily now on. But there is no clarity as of now under the rules. So unless government amend this Rule 46, in my view, this signature should be there on your invoice. Similarly, there is another issue of printing of e-invoice. So, since printing of e-invoice, if you see if you see certain FAQs, so therein they have mentioned that there is no requirement to take a print of e-invoice. But there is again a anomaly in respect of Rule 138. So, if you see 138A, that clearly says that at the time of movement of goods, you are not required to have any physical copy of invoice. In case you have an IRN in your hand that is being contained after like registering your GST INV 01 on your IRP portal. So therein, if we see that rule came into effect with effect from 2018. However, e-invoicing has been introduced recently in 2020. So therefore, there is a question whether this rule 138A was subjected to cover only this printing mechanism for e-invoicing. So this is still a doubt which is not clarified yet by the government. But in my view, since that rule is in place and that talks about IRN number, therefore we can take a benefit of that rule and we can say there is no need to carry the copy of print of e-invoice. But again, government should clarify on this respect also. So there are certain other issues also on e-invoicing which are yet to be resolved by the government. Like one of the issue is multiple supplies under a single e-invoice. So basically, let us say a classic example wherein you want to mention certain entries like in the classic example of logistics sector, wherein they when they supply some supplies to their uh, recipient which is located outside India. So some services can be taxable basis the general rule of place of supply, wherein the place of supply is the registered recipient location that is outside India. However, there can be certain transactions like custom clearance, etc., for which tax should be determined as per rule section 13(3)(b), that is performance based, which says the custom clearance should be the place of supply. In that case, usually these persons raise single invoice for their taxable supplies which contain multiple supplies with multiple place of supply. So currently, if we see, currently also there is no bar or restriction under GST law which restricts a person from issuing invoice with multiple place of supplies. However, there is a bar under GSTR1. A GSTR1 does not take more than one place of supply for a single document number. So this was the problem being faced by the clients as of now also. So to done away with that problem, clients were like prefixing certain extra number of say it's zero or certain special marks, hyphen, exclamation mark, etc. before their document number, so that GSTR1 accepts that, and they could follow the similar practice by issuing single invoice with multiple supplies. However, under e-invoicing, government has specifically clarified that you cannot prefix any zero or special mark before your document number. And they have clarified this is to prevent any person from raising single invoice for multiple transactions. This is not for the purpose of registering single invoice multiple times on the IRP portal. Therefore, it seems now on you cannot take any benefit of that, prefixing any document number, etc. Therefore, you should raise separate invoices with multiple place of supplies now on. Similarly, there is no mechanism under e-invoicing platform wherein you can mention your exempt supplies as well as your taxable supplies against the single document. Therefore, it is suggested that you raise separate invoices for both. Thirdly, again, it is yet to be seen that whether the debit note or credit note, for like let us say an example wherein you have raised an invoice for a person by charging GST at the rate of 18% on a particular supply. After next month, you got to know that that supply is taxable at the rate of 28%. So there comes the question, you as per the law of section 34, you can raise an invoice or debit note for this 10% excess tax without mentioning any taxable value. So question arises whether the same invoice can be reported on e-invoicing portal. There seems to be a major dispute in this respect. It will yet to be seen whether this system will accept zero taxable value. So this is a doubtful. I don't see there is any facility which accepts zero taxable value. So therefore, some amendment should be made by government in this respect. So these are certain issues which should be kept in mind. Either we should go to seeking some clarification from the government, or that should be kept in mind while keeping or changing our systems. So, with the procedure or methods to generate iron, the system has given us three type of methods. One, your current ERP system can be directly linked with the IRP portal, wherein you can continue raising your invoice in the similar manner as you are doing today. In the backend, your details will be punched or will be pushed to the IRP portal, and the IRP portal in return will give you an IRN number and QR code, which you can mention on your invoice. Similar practice can be done through a GSP. In case your ERP portal is not suitable enough to connect through directly to the IRP, then you can then a GSP can come into picture, and you can push your current details to GSP, and GSP can have integration with the IRP portal, and their details can get back to you by the GSP. Otherwise, you have this offline tool also wherein you can manually punch your data to the system IRP portal, and thereafter you can affix that IRN number and QR code on your invoice to make your invoice a valid invoice. So if you see on these bases, what are the action points for you people? So if you see, the taxpayers are required to make certain additional feeds into their IRP system. As I mentioned, so there are going to be various additional feeds like HSN code is going to be accepted in one manner only by the IRP portal. So those HSN code, master codes, and the other codes, currency codes, etc., can be integrated or aligned within your system so as to align it with your IRP portal. Similarly, these your system should be capable enough to integrate or to convert JSON format into readable format. And third, as I mentioned, there have been certain mandatory fields which are there in GST invoice 01, that is e-invoicing schema. That additional field should be added into your system so that those fields are there in an invoice. Similarly, you should do this vendor categorization as to for what all clients you have to raise this e-invoicing and for what all documents. And also you should capture in your invoice these in your data these IRN and QR code, because that system, IRP system, will not carry it forever. So these are the action points from for client's perspective. And with this, I conclude my session. And Urmila and Sumiji, we can have the question answer session on this now.
Yeah, Kriti. Thank you for such a wonderful deliberations, and you have covered so many questions itself. And let me check if there are any queries on YouTube. Yeah, there is a query by Dinesh Gupta. Please clarify invoice with multiple place of supply with example.
Uh, okay.
In,
As I mentioned, yeah,
I think,
I'll just take this query. As I mentioned that in case of logistic clients, there can be like two type of services. One, they are engaged in making transportation of goods by road services for the recipient who is located outside India. That transportation services, the place of supply is the destination, which is like out, which can be outside India. However, they are also engaged in making certain supplies like customs clearance, for which the place of supply will be in India. That is the customs port itself. Therefore, in such case, two or multiple place of supplies will be there. So the question arises whether we can raise an invoice with these two multiple place of supply. So that's a question. That's an example of this. So as I mentioned, currently invoicing does not have any mechanism to report this single invoice with two multiple place of supply. Place of supply can be mentioned once in respect of a document. That's the
so we
problem.
have to generate two separate invoices if separate invoices for every place of
Yes, for
supply.
every place of supply. Right, right.
Okay. Uh, can we file refund application in respect of inverted duty sector for financial year 17-18 now?
Okay. And that's a big question. Why? Because if we see 17, 18, earlier for the time limit for filing such refunds was end of the financial year. So end of the financial year was like March 18. So March 18, if we see the 2 years will be completed in March 2020. And since March 2020, there has been a recent extension of certain, uh, there has been extension through notification number 35 by 2020 that you can extend your time limit till 31st August. So therefore, a view can be taken that you can claim your refund till 31st August, but that will be disputed by the government. So we'll have to get to see this. But in my view, a view can be taken that yes, you can file even in those cases also.
Okay. Uh, so I have also one query, like in after when e-invoicing will come, if there is any discrepancy in e-invoices and e-way bill, that can be rectified simultaneously, or it will we have to rectify it one by one.
Okay, okay. So in this respect, if we see there is no mechanism to amend any detail on e-invoicing portal. So once e-invoicing generated, you cannot amend, you cannot make any amendment. So therefore, I don't see any scope in respect of these amendment. However, the e-way bill once generated, if that utility is there on the e-way bill portal, that changes can be made, but e-invoicing cannot be changed once generated. So this is another major problem in e-invoicing.
Okay. Uh, like yesterday, there was a press release on Section 50 interest on delayed payments. I have a query, like those who have already paid the delayed interest on the gross tax liability, will that be refunded? Is there any provision, or we have to wait for the clarification for that?
See, that's what I highlighted in my during my presentation also. Okay, there is no clarity as to whether we can actually take the benefit of retrospective effect or not. Though, in my view, basis this Madras High Court judgment of defects industry, we can take a view, and basis this recent press release, we can take a view that this is going to be retrospective. This should have a retrospective effect, and therefore we can ask for refund in such cases. In my view, we can ask for refund. Definitely.
Okay. So here we wind up our session. Thank you, Kriti, for such a wonderful deliberations. And there are so many relevant feedbacks for you. A wonderful session. And you share your PPT through we will share through Telegram. I would like to tell the viewers that our today's session PPT will be shared through the Telegram channel Team Casa. Till then, stay tuned to our Team Casa channel, and we would like to thank you, Sumit sir, for integrating to the viewers so many eminent speaker of the industries and giving opportunities to newcomers and valuing the knowledge of all the viewers. Thank you, Kriti, and have a nice day. Thank you, viewers.
Thank you,
Bye
Urmila.
bye.
Thanks a lot, everyone, for joining us. Thank you. Bye.